Bitcoin crashing. Fear and greed index at all-time low. What's next? Hey everyone, Andrew here, your favorite crypto expert, ready to break down some juicy crypto news. So buckle up, Buttercup, because this one's a doozy. Bitcoin's price just plummeted below a critical support level, plunging lower than a penguin in a summer heat wave. Oh, and the fear and greed index? It's hit a new low, settling at a measly 22%. That's like saying, OMG, we're all going to die in the crypto world. What does this mean? It's like watching a herd of wildebeest stampede, except instead of wildebeest, we have investors scrambling to sell their Bitcoin. This intense fear could mean a massive crypto sell-off, leaving even the biggest bulls wondering what happened to their golden goose. Let's dive into the numbers. Bitcoin is currently trading around $56,786, down over 4% from earlier this week. It's like a roller coaster ride, but instead of excitement, it's more like a stomach-churning plunge. You see, Bitcoin closed below the $57,000 support level, which was considered a strong base. This drop has sent traders running for the hills, with their wallets clutched tightly. The Fear and Greed Index, which gauges the emotional roller coaster of crypto investors, has dipped to a laughable 22%. A score of 0 is the peak of despair, and 100 is the epitome of greed. So with a score of 22, you can imagine the state of the market. It's like being stuck in a room full of panicked hamsters. But hey, there's more to this tale of woe. Whale traders, those big-time investors with wallets overflowing with Bitcoin, have gone missing. They've been suspiciously absent from the market, which means they're either in a secret bunker waiting out the storm, or they're jumping ship like rats leaving a sinking ship. For instance, Bitcoin ETFs in the US have experienced a significant cash outflow. The US spot Bitcoin ETF saw a net outflow of approximately $211 million on Thursday, mainly driven by withdrawals from Fidelity's FBTC. On the other hand, BlackRock's IBIT hasn't experienced similar outflows, hinting that not all big institutions share the same bearish sentiment. On-chain data adds to the drama. Reports show that large Bitcoin holders, or whales, have been dumping their Bitcoin onto exchanges. This move suggests they're either preparing to sell or hedge their positions. This is like a giant sell sign flashing across the market, prompting even more panic. Despite the commotion, the total supply of Bitcoin on centralized exchanges has been decreasing over the past 5 months. This could be a glimmer of hope. It suggests that long-term holders are sitting tight, unfazed by the market fluctuations. They're like the wise old tortoise waiting patiently for the hare to exhaust itself. So what's the future for Bitcoin? Well, it's like a game of poker with the stakes set at $1 billion. Veteran trader Peter Brandt points out a macro megaphone pattern in Bitcoin's price chart, which has historically preceded bullish trends. But he acknowledges that the current bearish sentiment is overshadowing this potential bullish signal. Arthur Hayes, co-founder of BitMEX, also has his own gloomy prediction. He suggests that Bitcoin's price may drop below $50,000 in the near term before potentially rebounding to reach new all-time highs. He's like the crypto Cassandra, foretelling doom before a potential rebirth. Despite potential interest rate cuts by central banks, which could be a shot in the arm for risk assets like Bitcoin, Brandt believes that Bitcoin's price might retest a support level around $46,000 before any substantial upward movement. So, what should investors do? Given the current market conditions, it's like walking through a minefield. One wrong step and you could lose your shirt. Here's what I recommend. 1. Monitor sentiment indicators. Keep your eyes peeled for the Fear and Greed Index and other sentiment indicators to gauge the market mood. It's like a weather forecast for the crypto market, so you can avoid getting caught in the storm. 2. Evaluate risk tolerance. Know your limits. If you're a risk-averse investor, it's like playing it safe by staying out of the casino. Consider reducing your exposure or hedging your positions to minimize losses. 3. Focus on long-term trends. Don't get swayed by short-term fluctuations. Remember, Bitcoin has long-term potential, even if the market is acting like a toddler throwing a tantrum. 4. Stay informed. Keep up with market developments, regulatory news, and macroeconomic factors that could impact Bitcoin's price. This is like having insider information in the crypto market, giving you a competitive edge. In conclusion, Bitcoin's Fear and Greed Index hitting an all-time low is a signal that the crypto market is experiencing a severe case of the jitters. With Bitcoin slipping below key support levels and a hefty exodus from major ETFs, the short-term outlook is about as optimistic as a wet paper bag. But even with these bearish trends, there's still hope. Don't forget, folks, get a welcome bonus of up to $5,500 for newcomers on the Bitunics cryptocurrency exchange. Click the link in the video description to get started. The long-term potential of Bitcoin remains robust despite the current market frenzy. Remember, the crypto market is a roller coaster ride with its ups and downs. So hold on tight and stay tuned for more crypto news. Don't forget to subscribe to my channel and like this video. See you in the next one.